Hey all, welcome to Share Track. This is Raj here. Friends, finally the kidney stone has been passed, or so I think, because we have the announcement from the Rose Garden about all the tariffs. And I'll give you my analysis of that, and then we'll proceed to do a little bit of survey of the damage in the aftermath of this announcement. So the key points that I'd like to make is that, first of all, no tariffs would have been much better because the Fed had a complicated job just making sure that we have a soft landing. Now, the Fed's job has become even more complicated, right? So that's the first point. The second point is that, to an extent, uncertainty has been removed because we now know for sure that tariffs are happening, and we also have some numbers for each of those countries. So that is the second level of certainty we have. The uncertainty still is how long it is going to last, because the communication says that it will be in place as long as President Trump thinks it is needed, and it will be removed when President Trump feels the objectives have been achieved. So that's a very vague termination date. And there is also reports, at least in the Canadian press, that this entire set of proposals, tariff proposals, are being sent to the Congress for approval. So if the Congress approves, then it becomes much more permanent, because if it's an executive order, the next president can come and cancel the executive order. So it will be temporary. And you may ask, why? What is the importance between these two? I would think that the executive order is much weaker for businesses to rely on, because when businesses decide to build a plant and invest in US to supply for the US market, they would always be worried that if Trump leaves and the next president comes in and removes all the tariff, then they would be at a competitive disadvantage, because the same products can be made cheap elsewhere and sold in the US. So in order to make those kind of huge commitments, they need an amount of certainty. So it's a good thing that the tariff proposals are being sent to the Congress to get approved. But the uncertainty, the second level of uncertainty, is whether the Congress will be able to approve it or not. So there are a lot of push and pull going on in the Congress, and we'll see what happens out there. So the thing that baffled me today the most was the fact that the market went up rapidly in the morning. If you see, I'm just going to put this into a 5-minute time frame and show you what it looked like. I'll just go to indicators, go to S&P 500. So this is a 5-minute chart. Okay, each of these candles is 5-minute chart. This is 9:30 when the market began, and it kept on going up, all the way until somewhere around 110, and then it started coming down. And then there was this double bottom, and it affected the double bottom. So if you were to, I'm just going to do this for academic interest. If you said that the double bottom was ending here, and if you do a clone of this, change the color, and just stack it on top out here. Okay, so this is the target for the double bottom, and that was 5,682. The market ended at 5,670, but post-market, in the S&P futures that you had seen, there was a lot of activity going on, and it was all on the negative side. So I think that despite this target, the line of resistance out here, which was earlier a support, has acted. I'm just going to mark this as red. This is the line of resistance, and it didn't allow us to come back again. And our support at the 9-day exponential helped us to stay above. Now, one of the reasons that I have heard, which kind of makes sense to me, is something I heard on, I think, CNBC or Bloomberg somewhere. One of the analysts was saying that the reason why the stocks went up this morning so rapidly is because many of the investors were thinking, okay, we are going to get clarity today at 4 p.m. after hours. So it must be something interesting. It must be something good. And the clarity is going to come in, and the uncertainty is going to go away. And if that happens, then tomorrow morning, the markets will open very strong. So why not grab the market before it becomes strong tomorrow? So many people started buying in at the lower prices that we were seeing. It was very attractive, lower P for Google, lower P for Meta, lower P for Tesla and everything. So they jumped in. and they drove up the price. And in the afternoon, they started getting second thoughts, and things moved a little bit down and up. But post market, after the Rose Garden address, the futures, they showed a immediate decline. You saw S&P 500 down 3.34%, and you saw Nasdaq down 4.25%. The market is still open; it's going down and sideways. So things are not looking good from a market's perspective. This is the market speaking and saying we did not like what we saw. And if you go to the dollar index, you can see that the dollar is depreciating. And if you look at the 10-year yield, you will see that the 10-year yield has dropped 0.82% today. It's gone down further. So the drop in the yield and also the drop in the value of the dollar is something that the Trump administration was always looking forward to, because they believe that will help them to manage the high level of debts that they are facing. So I must say that President Trump is doing whatever he can in order to salvage the situation. It's easy for all of us on YouTube and at home to comment that Trump should do this, Trump should do that, and whatnot. But the fact remains that he managed to win the presidency. That's not a small feat to become the president of the United States. And if he reaches there, he must have some chops that he's going to use. And he has got advisors and all around him. So I'm hoping and praying that he knows what he's doing, and we all get to learn something new. And I'm going to keep an open mind going forward. And that will be very essential for all of us as retail investors, so that we are unbiased and we just look at the data instead of getting influenced by our emotions and sentiments. That said, let us look at USD Japanese yen. So the US dollar is buying less and less of Japanese yen. So this could also lead us towards the, let me see the 1-day chart just to be sure. So we are still far away from the yen unwind target. So we are okay out here, but this is the general flavor. And because the markets jumped up in the morning and increased significantly even before the Rose Garden address, and then dropped precipitously afterwards, I'm just going to show you what I mean. Look at PACB. PACB went up 12.39% during the day and came down 7.87% after the Rose Garden address. It came down 7.87%. Now, Intelia went up 9.69% during the day, came down 8.36% in the post-trade. There are some stocks which did really worse, like Ginkgo Bioworks went up 5.3% during the day, came down 6.71% during the day. You look at Beam, it went up 4.79% during the day, came down 8.55% in the post-market hours. If you look at Illumina, it was up 4.45, came down 1.71 in the after hours. Then there are a few other companies which had similar situation. Grail, for example, went up 4.14% and came down 5.32%. We have ArcG, which again went up only 3.32%, but came down 8.10%. CRISPR Therapeutics went up 3.17% during the day and came down 6.73% in the post-market trading. And then I have mRNA, which went up 2.06 during the day and came down 3.93% in the after hours. And of course, Prime went up just 0.28% during the day and came down 5.03% in the after hours. And of course, we have Vertex, which managed to break down below the diagonal line of support that we had. And the diagonal line of support became a resistance, preventing it from going up. And the 50-day exponential gave it the necessary support. Tomorrow, we'll see what happens. And then we have Verve, which was down 5.44% during the day. And after hours, it was down 1.53%. So guys, this is kind of a yo-yo effect. Typically, when you drop a ball from a height, it bounces a couple of times before becoming steady. So I'm thinking that on a regular trading week, if one day we see Genomics go green, all of them go green, the next day, most of them are likely to go red. And then the following day, they go back green again. This is a trend that we have seen to a great extent. But today, what has happened is unexpected rise in the morning during the trading hours, and then a precipitous drop after the trading hours. After hours trading might have overdone it or underdone it. We'll find all of that when we open on Monday. And that's the reason why I don't want to do any technical analysis today on the genomic stocks, because it's not going to make any sense. I'm thinking that what will prevent President Trump from tweeting at say 9 p.m. or 12 o'clock at night or 2 o'clock in the morning, something that might change the market sentiments completely. We don't know, because anything can happen, right? So I would seriously recommend that at least for tomorrow, just join me in the live stream in the morning at 7:45 a.m. Eastern time. I will be doing the stuff for the AI guys. I'll go through futures, indices, indicators, and then AI. And if you're there, I have live chat going on in the parallel. You can always put the tickers that you want me to look at in the live chat, and I'll respond to you, and I'll do a technical analysis for you on those tickers, even if it's not on the watch list. And then I'll, before I close the live stream. So 7:45 a.m. ET, please be there, and we'll take it from there. Thanks and have a great day, guys. Bye for now.